Hello, thank you for watching this video. I'm Sam from My Mortgage Angel. This is the latest episode in my Ask the Expert series. We're recording this on a very sunny evening. It's Thursday, the 9th of May, 2024. I don't know about you, Will, but I think I'd rather be in the garden with a nice cold drink right now rather than recording a webinar. But you've got such useful information. Exactly. You've got such useful information I want to get out there to my clients and people watching this. So we're going to plow on through and hopefully share some information. So Will, I'm going to let you introduce yourself and then we'll go from there.
Absolutely. So my name's Cronin, or Will. I'm an independent financial advisor and I work for a company called Corporate Financial Resources. It's actually a family-run business with my father and I. And yeah, within our outfit, I'm actually the protection specialist. So that's kind of what we'll be talking about today.
Fantastic. And we've known each other for about 5 years now, haven't we?
Yeah, just shy of, yes.
Yeah, so My Mortgage Angel is regulated through Quilter, but it's regulated through Mark Cornelius. So My Mortgage Angel is a trading style of Mark Cornelius. And you used to work through Mark as well, don't you? And you're actually still sharing an office with him. So that's how we've met and had that trusted relationship there that's going strong, actually. And you've helped a number of my clients already when we've not got time or capacity, or if there's a particular area where I think you can do a better job, then I think it just works really well to do that cross referral.
Absolutely. And the way I like to describe it is that we're spokes of a wheel on a bicycle with the client in the center. You're one spoke, I'm another. There are plenty other ones out there.
That's a very good analogy. I think I might use that one in the future, Will. Cool. Right, so the aim of this evening, we're going to try to demystify personal insurance. So there's 4 main types of personal insurance, and we'll just go through them one at a time. I'll ask you some questions. You'll give me your expert opinion and advice. We're not allowed to talk about anything policy specific, and we're not allowed to talk about any providers in particular, because obviously we have to get this information out to the masses. So we do provide bespoke advice per client situation, and we can talk about providers and that, but in this general level, we're just going to keep it nice and informative for now. Okay, so don't break the rules, because I do want this video to get out.
Sounds good with me. Let's keep it a very high level general.
Yeah. So when I'm explaining things, I always say, like, I'm explaining it to my nan. And I think you're probably of the same ilk, can't you? If your nan would understand it, then you know you're explaining it at the right level. You're not making people feel silly, but they need to understand, because insurance is a really big area. It's not taught in schools. I don't know how people are supposed to understand this.
No, absolutely. And to be honest, I've been in the industry less than sort of 5 years now. I kind of like to explain it to myself as if I never knew anything. So, and how I've been taught myself.
Yeah.
So, yeah, just keeping it really simple to really understand.
Yeah. Okay. Right. So we're going to dive in then. The first kind of insurance that I always talk about to clients, and I know it's the same as you, we call it life insurance, but that's a really general term. What does life insurance actually mean, Will?
That's a great question. So it basically covers your life in case you die. And you said earlier, it's a lovely sunny afternoon, nice and hot. It's kind of a bit of a dismal conversation, but what does happen if you die? What happens to your debts or any of your borrowing you've been doing? Or what happens to your family? So life insurance you put in place to basically help you or help your loved ones deal with your finances after you pass away. There are 2 certain types of it. Decreasing, which is very much like a mortgage repayment. Decreases over time as you repay it, and the payout of that decreases over the period of policy. And the other one is a level term insurance. So I know they're big fancy words, and it just basically means that the sum that you wish to be insured for will never drop, unlike the decreasing version. It's quite simply put, pays out if you were to pass away. It covers your life if you die, or potentially if you are terminally ill. It will still pay out. It can be on your life, or for instance, if you are a couple, you can have a joint life policy. So if one was to pass away, the other surviving spouse would get the payout as well. So yeah.
Okay. I mean, I often describe it as death insurance, because I think that makes more sense rather than life insurance.
You've just summed up all of my words into quite simply one line.
Yeah.
It is death insurance.
So it's a policy that's designed to pay out a cash lump sum if you die during the policy term.
Correct.
Yeah.
Absolutely.
Yeah.
So, for instance, if I gave you a scenario, a young couple, mid-40s with 2 children, buying their second property, and wanted to make sure that to look after the children or a surviving spouse, they could insure their mortgage on a decreasing term, and then also with the same insurer or a different insurer have a level term that could pay out a lump sum and help the children or the surviving spouse with a generous amount of money that they can do with what they wish.
Yeah, yeah. Because none of us really want to think about the day we die. I mean, ultimately, it's a fact of life. Death and taxes, that's what's going to happen. But the way I describe it to my children, I'm describing life insurance to an 11 and 13-year-old. If Mummy and Daddy die, you'll be sad, but you'll be rich.
Yes, there is that.
And I think, you know, when someone passes away, most situations, it's a horrifically terrible time, and family are all dealing with grief and stuff. I think the last thing you want to be worrying about is money. So life insurance is just a great way of taking that financial pressure off, of thinking, okay, something happens to me. Yeah, I know it's probably not going to be great for all those millions of people that love me, but actually, financially, you know, my loved ones are going to be safe. So yeah.
Absolutely.
Cool.
And me personally, I've got life insurance. It just helps me sleep better at night, knowing that if the worst was to happen to me, I know that my loved ones are going to be looked after, basically.
Yeah. Yeah.
So yeah, and to be honest, from a cost perspective, it's not massive. The younger you are, the cheaper it is, because you're that further away than death.
Yeah.
But yeah, just to one little tip, I would also say,
don't talk about numbers, because that will get us into trouble.
No. I was going to say smokers' rates.
Okay.
If you do smoke, there is a higher chance that potentially you could die. So yeah, it's all risk balanced, shall we say. So
the policy is based on your age and medical condition when the policy starts.
Right.
And I'm sure there are well, I know there are policies out there that are written on guaranteed rates, and there are policies available that are written on reviewable rates. So a guaranteed rate policy, the premium will always be the same for the term of the policy.
Yeah.
If it's a reviewable rate, they are sometimes a little bit cheaper when you start, but the premiums are reviewed each year, and they do go up in line with your age. So over the long term, they might not be the most suitable. So there's lots of things to consider. It's not just about the cost of the policy. It's about, is it suitable for your needs, and is it going to do what you want?
Absolutely. And it's whether or not you feel comfortable with potentially it changing in the future, or do you want that solid ground? That's what it's going to cost me for the rest of the next 20, 30 years. Yeah.
And I often, I work with lots of first-time buyers, and budget is always something that we talk about, because you can't spend, you have to be aware of people's budget when you're looking at insurance. Yes, you might all think that this insurance policy is right and what they need right now, but actually the budget just isn't there to start with. So sometimes people can start with a smaller policy just to get that base foundation in, and then they can build on that in the future, can't they?
Absolutely. You can add to the life insurances if you move or something like that. You could add additional life insurance to it. I'm glad you said first-time buyers, because I've been speaking to quite a few recently, and a lot of them say, well, I don't know how much. Well, first of all, insurance costs, and then what my budget's going to be, because I've never moved in. I don't know how much my electricity is going to be, my gas, etc., etc.
Yeah.
So starting at as low as possible, and then building on that in the future is potentially the way to go.
Yeah, yeah. I kind of use a bit of a guide of, I think there's something I heard, something I read of, if you don't know how much you should be spending on your insurance, then maybe start at 10% of your mortgage payment is a starting point. What cover can you get for that amount of money a month? Does it feel comfortable? Does it suit your needs? Do you need to go up? Do you need to go down? But I find that's a really good starting point. It's all about a conversation. And, clients have never heard of these policies before. They've never really factored it in from a cost point of view. So it's really just helping them understand what the policies are and why they might be, why they might want them. And then why they would want to spend that money on it for maybe a 40-year term if they're going to match it to their mortgage. It's quite a big commitment as well, isn't it?
Oh, completely. But everyone insures their phones in case of broken screens, or insures their car for dents and scratches, but we never think about our own lives and what value can you have on that. It's a huge thought process.
Yeah.
And I guess that's why we're here to help our clients through it.
Yeah, yeah. So we've just gone totally off script there, Will.
That's all right.
That was going to be like a 2-minute, what is life insurance? We've gone quite deep into the likes of insurance already. But no, I think that's all a lot of quite general information there that I think people should know about.
Absolutely. I'll just say one last thing very quickly, Sam. Just that all life insurance should be written into what they call a trust, so that the money that pays out isn't ever paid into the person's estate. The likes of, I know definitely that you do this, I'm very good at it. And likewise, writing every single policy into a trust means that you're really looking after and adding value to each client. So yeah, one little tip: if you've got life insurance already and it's an old policy, just go away and double check that it's in trust. Even
if it's a new policy.
Well, exactly. Even if it's a new policy.
And especially if you did it yourself without the help of a broker, because to fill the forms out yourselves. I mean, I've been on training courses of how to fill forms out for trusts. These things exist. Yeah, I think you really need help with those things. And I'm not sure necessarily that providers have time to explain these things to clients over the phone, whereas we are actually allowed to give advice on what kind of policy we think is suitable for the client and then help them through that trust process. It's, I think everyone should buy insurance through a broker because there's so much information that goes along with it. It's really difficult if you just go and I see a lot of clients who have gone and bought a policy off the shelf and they come back and they say, oh, yes, I've got insurance. So, okay, let's have a look at it. I'm sure you've done this yourself, Will. And you go through and you say, oh, did you know that that's the limit? Oh, I didn't. Oh, and did you know it was on review of? Oh, no, I didn't understand. And when you explain what they've got, they're like, well, that's not what I wanted. That's not what I thought I was buying. So, yes, definitely do your homework or use a broker or do both.
Yeah, absolutely. Yeah, definitely do your due diligence.
Yeah. So, yeah. Sure. Okay. Right. We are going to move on because otherwise I think this recording is going to run out of time.
It might last some time.
Right. So first policy was life insurance. The second policy area is serious illness, critical illness, that kind of cover. Explain to me, how do you explain that to a client? Because this is quite a complex policy, I think.
It's a highly complex policy and loads of little pitfalls. if you're ever thinking about looking at critical illness, I'd definitely see a broker for this policy. Fundamentally, it doesn't cover, or it can cover death, but it also covers critical illnesses. And there are many out there. The three big common types of a critical illness or serious illness is heart attacks, strokes, and the big C, cancer. 1 in 2 now, I think the stats are.
Yeah.
1 in 2 of us will now have cancer in our lifetime.
Correct at the time of recording.
Sorry. Correct.
We're probably going to have to reference that now, Will. Thank you.
Sorry.
It's all right. Honestly, it's a stat that's out there, so yeah. It's a scary thought as well, isn't it?
Exactly. Quite simply put, this type of policy, if you have this, if you contract a serious illness, have it diagnosed by a doctor, this policy will pay out a lump sum of your choosing. So I can tell you that honestly, this has happened within my family. So we're a family-run business, my father and I. My father actually contracted cancer. He had this policy, he had a critical illness policy. He claimed on it because he had a doctor's diagnosis, and it did pay out the sum that he wanted it to pay out. And he was able to take 6 months of work to 9 months and have all of his treatment and everything else, and then slowly go back into work. So it really, a critical illness cover policy is something that I truly do believe in. It's helped out my family already.
And when you see that first-hand experience of a policy like this changing somebody's life, and I can't imagine how you deal with it when it's someone so close to you. But yes, I've seen how these policies do affect people who have had the policies, but also people who haven't had the policies. I think it's such an important area to think about. So I come at this from another point of view. I had to find out about this kind of policy myself. When I took a mortgage myself, I'm probably breaking all kinds of rules here. When I took a mortgage myself, nobody took the time to explain this type of policy to me. I was sold life insurance because it was assumed that was all my budget and all my demands would be. I just need to protect the mortgage. So that was all sorted, but nobody even told me this kind of policy existed. And then I had a very dear friend diagnosed with something that you really wouldn't wish on anybody. They didn't have cover in place, and they didn't have particularly good benefits from work, and they were forced, really financially, they were forced to carry on working through their illnesses because they didn't have any other financial option. And a policy like this, if you'd met the criteria and you would have qualified for a payout, can actually be life-changing. So I say to all of my clients, everybody I meet, even if the hairdressers or the butchers or something, just look at it. Just find out how much it costs for your situation, because everybody's risk is different. Whether you're a smoker, non-smoker, your BMI, your height, your weight, how much you drink, whatever, that all affects your premiums. But until you know how much the policy could cost for you, I don't think anyone can make a decision on whether they want it or not. So that's why I'm always asking you for quotes for all different clients, because I think it's really important. Firstly, that they understand it, and secondly, they understand how much it might cost them.
Yeah, and do they know that they can get additional special policies that can cover even more, or do they know what's excluded? If someone's got one with this type of policy now, do they know what's excluded right now?
Yeah.
There are so many pitfalls, and yeah, I would say if you've got one now, go back and read it. If you don't have this type of cover, go out and research it. Speak to a broker, speak to someone out there.
Definitely. And there are plans that you can review. So if your health changes for the better, that's not something that we always talk about. Insurance is what if your health improves? What if you give up smoking? What if you lose weight? What if something like that changes, actually that's a really good time to review your insurances, because sometimes you might be able to change your cover to put yourself in a better position to get more things covered maybe than would have been on an existing policy, even if sometimes it costs you more. It's all about reviewing these policies and making sure that you understand them and that they're fit for what you want them to do.
Absolutely. And it's the good old question, if you don't ask, you don't get. So
Yeah.
Why would you not ask an insurer if they could change your policy?
Yeah, definitely. I think people are scared to rock the boat, and I don't know if I should open that can of worms because maybe they're going to ask me about XYZ as well. So I think that's also another helpful thing from a broker's point of view, is we can kind of guide people into, well, actually, if you could be put in a better position by doing this, or let's just look at the options and we can do some research anonymously for them.
Absolutely.
Whereas they can't necessarily do that, or they wouldn't necessarily know the questions to ask. And it can be really daunting when you've not had to pass exams to study it or keep up with your CPD to be able to sell it. You know, we live and breathe this stuff, so we understand it, and it's our job to demystify it to clients, I think.
Completely. Absolutely.
So, quick recap: life insurance is a policy that pays out in the event that you die during the policy term. Yep. And we've covered serious or critical illness, and these are policies that pay out in the event that you are diagnosed with a condition that qualifies for a payout under that provider's definition.
Absolutely.
Great. So we've got one if you die, we've got one if you don't die. What else could there be?
Well, there are there's one that's called family income benefit. Mm-hmm. Quite simply put, it's about income. So, and it's about your family's income. Very, very similar to the last two. You could have it if you die, or you could have it if you are seriously or critically ill. It would pay out rather than a lump sum, and it's a bang, there's your money, you've made a claim. This is, you've made a claim, we're going to pay you a monthly income and help you in that manner rather than paying a big lump sum to start with. So the type of things, or the type of reasons you'd look into this are really is, if you do get sick or die, what happens to the bills? What happens to the school fees? Who's going to pay for your loved one's lifestyle if something was to happen? Like in the last scenario where I told you about my father, if he'd gone for this, it would have just paid him his income for as long as he needed it, for the end of the policy. So it's, again, very worthwhile just looking into this and seeing whether or not it's worth it. It will pay out a monthly income to you.
Yeah.
And it's a good way to get around it if you're worried about having a load of money in your bank, and then something happening to it, rather than having it as a big lump sum, you could have it on a monthly basis.
Yeah, yeah. There's a couple of scenarios where I've seen this used, and obviously it depends on everybody's personal situations as to what you want or what's suitable. I feel like I'm a robot, keep repeating that, but I really do want to drum across that message.
No,
but there are situations where a couple's finances might be that if one of them dies, maybe they earn equal amounts or similar amounts. Maybe they already have life insurance, so their mortgage would be paid if somebody dies. But if that person dies, there's lost 50% of the income to that household. And okay, the mortgage is paid off, but the rest of the bills are still there. You either then have to maybe take a reduction in hours at work to look after the children, maybe, or maybe you're paying somebody to look after the children. So sometimes your costs can go up whilst your income to the household has gone down. So I think these family income benefits policies can actually be really useful there. They're, of the insurances, they're quite reasonably priced. They're similarly priced to the life insurance as well, because they're based on death. And it's the risk of you dying rather than the risk of you not dying. And I know these can pay out in critical illness situations as well. Obviously, they'd be based on different statistics. But the other scenario I saw was where there was a couple, and they were, obviously, I'm a mortgage advisor, so most of my situations are people talking about houses and mortgages and stuff, which is the fun bit of my job. One person earned all the money, and the other person actually couldn't work from a physical point of view. So if the person who worked died, actually this person had zero income, so they wouldn't have any money to pay the bills. So a family income benefit was a really cost efficient way of making sure that they felt comfortable. And yeah, so that's called a family income benefit. You don't actually, there don't have to be children involved, do there?
It doesn't have to be a whole family.
Yeah.
And I'd probably layer on top of it the person not earning that income. Would they be happy receiving £100,000, £500,000 into their bank and then going, there you go, spend that, that's for the rest of your life? Or would they be happier on a monthly basis, drip fed that total lump sum?
Yeah, absolutely.
I'd also add that if you say, for instance, you started a policy today for a 20-year term, so it's to go on 20 years, but in 10 years something was to happen, you were to fall down dead, and you had this policy, that policy would pay out for 10 years, even though you passed away, and it would pay out all the way to the end of that time.
Yeah.
So it's a very cost-effective way of securing your family's lifestyle, basically.
Yeah, yeah. It's that peace of mind, isn't it? All insurance is, it's giving you peace of mind.
Helping you sleep at night.
So I've just had another thought, and it probably should have dawned on me a lot earlier in my career than this. But people where there's a divorce situation going on and there's maintenance being paid, we've often looked at different solutions, but a family income benefit, actually, you could insure your ex's life. So that sounds really grim, but because you would need your maintenance, you would want your maintenance income to be replaced if that person was to die. So whilst you don't necessarily want to be linked to that person anymore, you are still financially dependent on them. So I think there would be a policy justification there to be able to take it in that scenario as well, wouldn't you?
Absolutely, completely agree. And whether they wanted the lump sum or the income part of it is, again, could potentially help, but yeah, definitely advisable.
Yeah, sure. Okay. Right, so that's 1, 2, and 3 we've done. So the fourth area that we're going to talk about tonight, and final area, you'll be glad if you're watching, if you haven't given up already, go and make a cup of tea. You can pause this and go and make a cup of tea, by the way. You don't have to watch this all in one go. Final area is called income protection. And again, this is something that clients have never really heard of before. So how do you describe it, Will?
To be honest, I helped out one of your clients a couple of weeks back. She was self-employed and didn't have any way of surviving or producing an income if she got sick. She couldn't claim off the government or anything else like that. She was self-employed. And she wanted to be able to, again, I feel like I'm drumming at home, but sleep at night, knowing that she could have having an illness and then her income be replaced by a policy. This policy really would replace your income if you were long-term sick. The way I like to explain it to people is what happens if you are long-term sick and can't work. If you're an employee, you probably get about 3 to 6 months pay full from your employer. What happens after that point? Does it disappear? You probably get statutory sick pay for up to 28 weeks. But then what happens after that? Can you live on statutory sick pay? It again helps you feel more comfortable that your income would be replaced if you were to go long-term sick.
Yeah. And I was talking to a client about this very policy, very early doors this morning, and they got, I think they get 3 years sick pay through work, which is an incredible, you know, I've never seen one that long.
Is incredible.
Yeah, absolutely fantastic. So I've told him never to leave that job forever. But actually, he's the breadwinner for that family. So after 3 years, they would be really struggling financially. So we're going to be looking at some kind of policy that would then kick in after those 3 years. And the longer the wait between when you are unable to work to when you get your payout, it's called a deferral period. I know you know that, Will, but I'm explaining it.
Yeah.
So the longer that deferral period, the cheaper the policy, because it's the lower the risk from the insurer. So I think actually that's going to be quite a cost efficient peace of mind policy for them, that actually, because you're not allowed to have sick pay benefits and income protection paid out at the same time, I don't believe.
Not as far as I'm aware.
Yeah, under current rules as of 9th of May 2024. So you do have to be quite careful with this one. And I have seen clients in the past have a policy that actually wouldn't pay them out because it was set up incorrectly to start with. I mean, they thought they'd done it correctly themselves, but just the fundamentals of even setting up a policy can be really difficult. So to have someone like you helping them along the way and helping them with the forms and then getting the trusts all done and set up and logged with the providers so that it's all in place, I think it's a really beneficial thing that you do. I love what you do. I think it's fantastic.
Thank you very much. I appreciate that. I'd say on the income protection, it's based primarily on your income. So you can't go out and insure yourself for £100,000 a month, unless potentially you're a footballer.
And you can afford the premiums.
Yeah, well, yes, exactly. But it's based on your income, and every provider has a slightly different calculation. So I would definitely look into it quite a lot. Seek out some free advice if that helps. And then upon claim, again, it's all about diagnosis. So I, touch wood, haven't had a client claim on income protection just yet, but I'm sure in the future I will do. It has to be diagnosed and has to be something that is actually covered by that insurer. So
yeah,
again, very much like the critical illness, this can be a really complicated, complex policy.
Yeah. And I think that's probably a really important point to make about all insurances. Whichever policy you take will have terms and conditions, and you should really read those and understand them, because not every condition is going to be covered. Every provider's got their own little wordings of what they do cover and what they don't cover. So it's always good to just look at what you've got and make sure that it is still fit for purpose.
Absolutely. They every insurer terms and conditions, policy documents should be written so that anyone could read it and understand it. If you don't understand a policy document and you're reading it for the first time, ask your provider, ask your advisor, whoever is setting this up, to explain it and go over it, and ask as many questions. No, there's no silly question in this arena. I promise you. From learning it in the last 5 years, there is no silly question.
Yeah, fantastic. Okay, and then we have touched on reviewing policies that have been in place for a while. So I often get, if I'm helping a customer with a remortgage, say, our standard process is to always ask them, let's just have a conversation about this, so we can, I know that they understand what the options are. We can look at quotes if they want any. And very often people will say, I've got all that, I'm all sorted, thanks, I don't need to talk about it. But actually that's I don't think that's necessarily what they should be saying. I think they should be saying, actually, yes, let's take this, we don't charge a fee for our protection advice, So to just have that conversation and really just take the time to look at your policy, dig it out of the drawer. You know, who knows where their policy schedules even are? How would your loved one find the policy if something happened? How would they know that you have this cover? Have you told your trustees that they need to do something in the event that you die? That's another really important conversation to have.
I was going to say, Sam, you're crossing over almost into inheritance planning.
I'm not going down that road. I am not qualified. I'm not regulated for inheritance planning. Definitely not, Will.
Don't worry. I would definitely echo what you're saying. Are your policies fit for purpose? Do they cover everything that you need? And do you feel comfortable with those policies?
Yeah.
So yeah, I would definitely suggest that if you haven't had your policies reviewed, get them reviewed. If anything, you've got new policies, review them every year or 2 years.
Yeah.
But definitely on any type of change to your life, whether that's buying a new property, change of jobs, change of anything really, a new family member, even if you've taken up smoking. I mean, touch wood, people don't these days, but just double check, is it covered with your policy?
Yeah.
So yeah, I strongly advise everyone gets them reviewed.
Yeah, and the change of mindset of a policy review does not mean we're going to be trying to sell you something. It's about you understanding what you've got, and if you're comfortable with that, then that's a job well done, in my opinion. And if there are any gaps, we can look at them, but it's about the client being in control and understanding.
Yeah, and it's like you said earlier in the video, it's not opening a can of worms. It really isn't. It's, we want the best for you.
Yeah. Wonderful. So I think we've covered everything we were going to. Probably took a little bit longer than either of us expected, but you know, I think we've covered everything. If anybody's got any questions, then feel free to get in touch with us directly. My lady who helps me with all my social media stuff, the fabulous Mel Paul from Virtual Admin Assistants, she's going to put some subtitles on all of this so that you don't have to listen to us. You can just read the words, which is always a bonus, I think. And you can skip through bits and whatever till it's useful. But she's also going to put her contact details on the very end of this so that people can have your details, Will. My details will be there as well. So thank you for your time, Will.
Thank
really
you very much for having me.
Yeah, and it's lovely I really enjoy these. I know it's all really nerve-wracking when you start, but actually by the end of it, I think, I just had a really great conversation, and I hope that the people that watch do learn something as well. But if you don't learn anything, then maybe leave us a comment or something, and we'll do better next time.
Please do.
Right.
Thanks very much, Sam.
Thank you so much. Enjoy the rest of your evening. Bye.